people tend to make this mistake also that, wait a minute, when it's down, it's actually cheap. That's true. However, that's the case if you are investing. But when you're trading, you need to have your guns, you need to have your bullets so that you can use them to fight another day. Please do remember, for people who are trading, time is also important. People always say that time is only important for investors. Not really. Time is also important for traders. Hey guys, so if you're a trader, either in the cryptocurrency market or even in the Forex market or even in the stock market, regardless if it's in the Philippines, US, or any other market in the world, in this video, I want to talk about 3 types of situations on when you should avoid cryptocurrencies. What are these 3 things? And if you know these 3 things, it will somehow, at least from my experience, over a decade's worth of trading and investing in the markets, it can help protect you from losses, or it can minimize the losses that you have. People always think that when you study the markets, when you get better, when you try to improve, when you build your skill, it will prevent you from losing money. It will prevent you that you don't get to lose money in this entire investing and trading sphere, which is impossible. Regardless if it's a paper loss or an actualized loss or a realized loss, no one will be immune to not losing money. In one shape, form, or another, there will come a point in time where you will lose, either via paper or either you realize it by selling. I'm catering this for traders who want to know 3 specific instances on when they should avoid those assets, regardless if it's stocks, crypto, or if you're trading the Forex market. All of this is under the guise of technical analysis. So if you want to know more about that, just search it, Marvin Germo Technical Analysis, and we have hundreds of videos that will actually pop up. What's the number 1 stock and crypto that you should avoid? Those are stocks that are breaking down. A breakdown is when you see a stock fall below a level of resistance. And why are you supposed to avoid or sell, cut loss, or even if you know how to short stocks or cryptos that are breaking down? When you talk about support lines, those are price points where buyers think that it's relatively cheap. A breakdown is happening at the point where a support, which used to be cheap, regardless of whatever news is out there, either if it's just market driven or it's something that's fundamentally driven, price point that used to be an area where everyone thought it's cheap suddenly shifted, that people did not want to buy there. When I say people, regardless if it's institutions, regardless if it's retailers, people don't want to buy there. And if you've been following technical analysis for a period of time, more buyers bring the prices up, more sellers bring the prices down. And if more people don't want to buy at the support, suddenly it shifts. Suddenly, people who want to sell need to sell it at a much lower price. And when people need to sell it at a much lower price, the prices go down. Think about this. Whenever you want to sell something and then no one's actually buying it, okay, I'll just sell it whatever price it is, even if it's lower. And when that happens, accompanied by panic or accompanied by other disclosures that may cause people to get out of a position, you may see downward movements, not just in a gradual term, but sometimes it becomes faster. So when you see a stock or a cryptocurrency that's breaking down, avoid it. People tend to make this mistake also that, wait a minute, when it's down, it's actually cheap. That's true. However, that's the case if you are investing. But when you're trading, you need to have your guns, you need to have your bullets so that you can use them to fight another day. Please do remember, for people who are trading, time is also important. People always say that time is only important for investors. Not really. Time is also important for traders. Why? Because if it goes down, and let's say it's a fundamentally sound stock, it could go up. But while waiting, you could have used your cash to trade something else. So that's number 1. Number 2 is in the opposite, on the flip side, at the top. Avoid stocks or cryptos that are the resistance. Or if you own them, sell, take profits. Please do remember this. If a support is an area where there's massive amounts of buying, a resistance is an area where there's massive amounts of selling, people think at this point in time that it's relatively expensive. When you look at the narrative that, okay, when something is relatively expensive, what do people do? They tend to not buy, no matter how good it is. And it applies to everything, to bags, to shoes, to cars, to houses. When everything is expensive, people don't buy. Or when people perceive it to be expensive, they don't buy. And think about it also when you go to your favorite clothing shop. It's not something that you want to buy at that price. What's your narrative? Oh, I'll wait when a sale happens, so probably I could get it at a cheaper price. oh, maybe I'll just wait for another one. There might be something that may look the same but it's cheaper. If that happens in shopping, if that happens in department stores, that's also the narrative in trading, regardless if it's stocks or crypto. When it comes to a point that people don't want to buy, and please do note, there's a lot of methodologies on how people would analyze if it's not worth buying or not, or if it's expensive or not. In the stock market, people could use PE ratios, people could use price to book ratios, people also compute dividend yield ratios, people also compute the fair value of it. Or in the crypto market, people can compare it via market cap, that it shouldn't be as big as Ethereum, or Ethereum shouldn't be as big as Bitcoin, or Avalanche is not as big as Ethereum. When it hits a certain market cap, people think it's relatively expensive and they don't buy also at a particular area. So resistances are formed that way. So resistance is basically a line, a range, where when it hits that area, people don't buy, or you're not supposed to buy, because the common tendency is when there's a larger amount of people selling, even if it's Bitcoin or it's Apple or it's Tesla, please do remember that markets move in cycles. And when they move in cycles, there will come a point in time where it becomes too expensive, more sellers dominate, and when more sellers dominate, more sellers bring the prices down. And when more sellers bring the prices down, you don't want to be caught up holding onto something that's falling down. The more prudent measure for you is to take profits there when it drops again, and you know how to plot your support levels. That could be an area for you to stack, to buy, and add some more. Number one, don't buy stocks that are breaking down. If you know how to short them. Number two, don't buy stocks that are in the resistance. If you know how to short them also. Number three, these are for trend followers. Avoid stocks that are in a downtrend. The term downtrend is loosely used, similar to the term bearish market or bearish or bear. It's loose. A downtrend is basically a presence of lower highs and lower lows. A downtrend normally happens after a breakdown. A downtrend normally happens also when a stock or a crypto breaks down. It tries to push back up again, but the previous support is now the resistance. As it hits that, it falls lower and it fulfills the lower high and the lower low as well. A stock or a crypto is in a downtrend when the resistance level of that particular downtrend is very, very strong. As we see buying pressure come and it tries to hit it, the selling happens in that particular trend line, and then we continue to see it to fall. We don't know how low a stock or a cryptocurrency could go. No one can predict that. But we could know if it's in a downtrend. And since it's a downtrend, we don't know how low it will go. We don't know when it will reverse up. We don't know what's the bottom. But what we do know is when it's a downtrend, we don't have to transact. We don't have to buy. We don't have to be positioned in that. And that's what I'm trying to hammer to you. So let's stop trying to forecast. Let's stop trying to predict. People like predicting. People like forecasting. But the name of the game is, if you want to follow charts, just look at breakdowns. Just look at resistances. If you're a trend follower, longer time horizon, look at the trend. And when it's in a downtrend, all you need to remember is to avoid. When it's in a downtrend, all you need to remember is that hopefully you've sold prior to it reversing into a downtrend also. Be patient, be disciplined, that no matter how cheap it looks, no matter how attractive the stock or the cryptocurrency is, you need to wait, you need to be disciplined until you see it reverse from a downtrend into an uptrend. So those are the three things. Avoid stocks and cryptocurrencies that are breaking down at the resistance or are in downtrends. Please do remember this, especially for the last one. The trend is your friend. The longer it is in a downtrend, the stronger it is. Don't be lured about how cheap it would go. Be patient until you see actual buy signals start to emerge. So if you guys have more questions, I love technical analysis above all of the schools of thought. I love fundamentals too, but technicals are amazing. I guess it's because of my engineering background. I love numbers, I love charts. It's easier for me to be able to look at it also from that perspective. If there's anything that I could contribute to you to help you in this regard, put it in the comment section below and I'll try to answer you. I'll try to do my best to be able to give you as much value as possible. If you want to learn more about this, check out different playlists that I've made. Check out the books that I've written, 2 books, Breaking the Resistance, and it's also part of Winning Strategies for Investing. Or check out the webinars that I've done. You can look at it down below also. It's a 4-module course with different videos attached per module that you can watch at your own convenience. You can watch at your own pace with one goal, one heart, to be able to teach you on how you can trade the markets with confidence. If you've made it up until the end and you find value in the videos that I make, I just have a couple of favors. If you could press the like button because it helps the YouTube algorithm. If you could also comment in the comment section, that would be even better. You can put algo, you can put technicals, you can put stock smarts, you can put I'm learning regardless of what it is. And number 3, if you want to be updated every time I make videos like this, by the way, the videos come out every 8 p.m. daily. I'll never stop doing that. But if you want to be notified, click the subscribe button, press the bell so that you're updated. And lastly, I'm starting to get more active again in my other channel. It's been there for quite a while now. Over the past years, I've been really busy. I've stopped doing and posting videos there, but I'm starting to be active again. It's called Investing Made Easy, and that's where I think I'm gonna do my live videos, technical analysis videos, especially for those of you guys who are into cryptocurrencies. So that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.